Welcome to the Alternative Investor. The Johannesburg Stock Exchange is expanding its secondary listings framework by offering secondary listings from the Singapore Stock Exchange. This allows companies with a primary listing in Singapore to seek a secondary listing on the JSE, additionally qualifying for the Fasttrack listing route. For more, we're joined by Sam Mokorosi, who's the head of origination and deals at the JSE. Sam, thank you so much for your time. Take me through the rationale of this particular deal.
Thanks, Natasha. Good to be here. So the JSE, we see ourselves as not just a South African venue for trading and investment, but a global player that does punch above our weight. We're about 19th in terms of market cap in the world. We actually have about a third of our listed companies that are already either dual listed or are incorporated in some other country. And so we really see ourselves as an international hub. We've been very strong in Europe, we've been strong in America, we've been strong in Asia in terms of those connections, whether it's dual listing or inward listings, etc. But what we are really excited about is our Asia strategy to say, let's look east. A lot of world growth has been generated in the East. And so we are looking to sink our roots deeper into the East Asian market.
Sam, on the back of that Asia strategy, I mean, we've had your CEO, Leila Fourie, on the show a couple of times before, talking a little bit about it. But, you know, Asia is quite big. What does the Asia strategy entail, especially when it comes to new listings?
Thank you. So in terms of new listings, right now we're focusing on Singapore as our first stop. In the data space, though, we already have an arrangement in China with the China Investment Information Service, which is a subsidiary of the Shanghai Stock Exchange. And that's really more on the trading side to attract brokers to start looking at our market data in order to entice them to trade some of our stocks. With Singapore, though, what we're saying is that there's a gateway effect that Singapore has into the rest of Asia, and our investors who typically manage your and my pension can then get access to Asia through Singapore companies dual listing on the stock exchange, and that's really our first step in that listings framework in the Asia space.
Right. When it comes to Singapore, how big do you think this could be? I mean, what is the long-term impact that you as the JSE are foreseeing here?
Look, it is early days. As I mentioned, about a third of our companies are either dual listed or listed offshore. So over 100 companies on the JSE are currently either listed, dual listed with us, or domiciled offshore. So we expect that to continue to grow. We expect that the Singapore space will rise over time. We are planning travel restrictions notwithstanding, and we do hope that those will be lifted, and planning to travel out into Asia in the next year and attract some of those companies to list on the exchange.
This arrangement you currently have with the Singapore, Stock Exchange, if I read your statement correctly, I mean, you have something similar as well with the ASX, the London Stock Exchange, the New York Stock Exchange, as well as the Toronto Stock Exchange. What has been the appetite so far in terms of this particular route?
Look, so the Fast-Track inward listing framework, we think that's quite an innovative way to get companies to list quickly. What it allows the exchange to do is that we then say, instead of putting out a full circular and all of the listing documentation that one would require to list on the JSE, all you have to do is put up a notification on SENS and refer investors to all the information that is available on your website or in other exchanges. This kind of framework has allowed the likes of AB InBev to list on the JSE in literally 21 days, which is unheard of. And so we're very excited to offer this to Singapore as well, and to see this kind of attraction onto the JSE allow our investors access to more interesting and diversified counters all over the world.
Right, and I'm sure you keep abreast of what's happening, when it comes to news headlines. Every now and again, we see, headlines around delistings on the JSE, and I suppose that is part of the general business or market cycle. You will see delistings. What's the pipeline for new listings, for our local markets? What does that look like right now?
So the pipeline does ebb and flow. We're excited that this first week of December we having a new listing coming to the market, and we've seen a few listings over the year. We have seen some delistings as well, and the way that we are thinking about it as the JSE is that there's a whole ecosystem targeting that we need to get fixed. So we are engaging with partners in labor, in business, in government to say, let's get the South African economy growing. Let's invest in our SMEs. Let's invest in infrastructure. Because obviously a growing GDP means growing companies and more listings and less delistings. But we're also saying, what can we do as the JSE? So we've engaged in activities such as looking at our listings requirements and trying to cut out red tape. We're looking at giving exposure to more small caps, which is where most of the delistings are happening. We had a great webinar and showcase with our small caps earlier this year. We plan to do more of those. We're looking at research coverage over small caps to say, can we get small cap research coverage back to the level where we've seen it previously, so that investors can be more aware of these small caps and the opportunities that exist in the small cap space. Every big company started as a small cap, and so we're really looking to create an environment that allows for more small caps to grow from, as somebody once said, from acorns into oak trees.
All right, Sam, thank you so much for your time. That is Sam Mokorosi, who is the head of origination and deals at the JSE. We're going to take a quick break.